How to minimize taxes on IRA withdrawals. So number one, let's talk about how IRA withdrawals are taxed. Then let's talk about the strategies to reduce your taxes if you did take a distribution. And number three, just smart planning, what to maximize your retirement income. But I don't like the word retirement because it's an agriculture word. It means to put cattle to pasture to die. You're not a cow, you're not dying. So we're going to say your qualified plan tax plan. Let's go into that. So get a pen and paper for those of you that are younger who tend to ignore this stuff, putting money away for the long haul in very certain strategies. Like we're not going to talk specifically of Roth IRAs and its withdrawal, but Roth IRAs grow tax-free, tax-deferred. And in our Make Your Kids Millionaires book, which I'm going to give you a link in the show notes, if you haven't got that, even if you're in your 40s or 50s or 30s, there's 87 things in a checklist that you coulda, shoulda, woulda done between 0 and 20. And one of them is between 0 and 20 is you maximize your contribution to a Roth IRA and buy assets that actually have some nice growth. Like I bought Bitcoin at 4,000 and at 9,000, and they are running away in our Roth, tax-free, tax-deferred. They're fabulous. So those kind of things, a low stock purchase that actually, has a lot of movement and growth, that grows tax-free, tax-deferred. That one move maximizing from 0 to 20 will make your kid a millionaire. Do the compounding power of that plan. Now, how are IRA withdrawals taxed? Let's talk through that. I'm going to write it off a list. They are taxed at your current income rate. Your required minimum distributions has gone up. It's now 73 years old. And early withdrawals before 59 and a half can incur penalties. So how do you reduce the taxes if you decide to take a withdrawal? Now, you can take an emergency withdrawal and the penalties are much less, knowing you're going to be paying it back because it's an emergency. But if it's a long term, you're not paying it back, then you want to convert some of your IRA to a Roth and then pay the taxes in lower income years, if you have lower income years. A lot of times you're thinking of these strategies in your high income years, and your better strategy there is to actually get a 401k under the company that you work for, which is your company, not the W-2 paycheck stuff. I'm talking about your own company, have its own 401k, and you can put away anywhere between $60,000, sometimes as high as $88,000 as a tax strategy on your higher income years. So a little different reason to do those kinds of things. Time withdrawals strategically stay again in the lower tax brackets. Those are like timed and emergency. You can always do those. And use qualified charitable distributions to bypass taxable income, the meaning gift. Give your kids gifts, give your charities gifts, do some gifting as suits you. Now, before we go to the last point, I want you to subscribe to my channel. Be here 5 days a week. We are a family-friendly channel. Those of you that haven't got your kid a Roth, I'm going to give you a link below. Go to iFlip, grab a personal account, open a free Roth IRA, and start doing contributions and start really understanding the market and how you can use iFlip to help grow a wealth plan for yourself. Now, again, that's a software, not me giving advice to you. If you have any questions, you always want to go to Ask Loral, AskLoral, ask a question, make a request. Now let's get back to final strategies. So final strategies, smart planning tips if you want to do early withdrawal on your IRA. Diversify your retirement accounts between pre and post-tax, meaning Roths versus the traditionals. You want to invest in tax-free vehicles like the Roth, and we already talked about a few different items in that. You can also do participating profit notes. There's all sorts of really creative strategies if you really have a good self-directed company to work with. And then again, you want to work with an income strategist. So you don't need to actually have a financial planner. I like the income strategy because I like building businesses. Building businesses and building real estate is how most wealthy people live. So when you have those two in your portfolio, and yes, most people have a whole stock portfolio, but if you look at just those, you want to, within your businesses, have those 401ks, have qualified plans in your family, have the Roth IRAs, but plan your highest income years to your lower income years and create a spreadsheet. Really, I mean, you can do more than that. There's all sorts of softwares, and with AI the way that it is, you can model out quite the financial plan. You just have to put it in motion. So if you want to talk to one of our teams about us supercharging your motion of your plans, your income plans, your tax, education in investing, and using a team, I'm going to give you 3 chapters of my Millionaire Maker book fill out the gap analysis, send it in, have a one-on-one session. The more you tell us about what you're here for, which by the way, most people that are coming through our doors want to either make more money and they want to reduce their taxes. Huge, huge pieces of their puzzle, and they want an integrated team instead of a segregated team. So have a gap analysis, have a one-on-one session. We're here 5 days a week. Make sure you share this. It's, again, family friendly. Share it with 10 other families, and we'll be back tomorrow.